Silver and gold have formed the necessary lows to consider a potentially full structure within their corrections. In the case of silver, the correction has in fact finally completed a decline similar in proportions with what we've had in its wave 2. And as a result of that, the likelihood of a bottom has increased significantly. So today I will share with you the level of resistance I want to see broken for the strong indication that a bottom would indeed be in for these commodities, as well as the path that I'm tracking within these patterns. Gold might be leading here, suggesting a potential bottom, and that is exactly what we will be watching. Welcome to the trade setup. Gold is already suggesting quite strongly that a bottom could be in, but we will start with silver and then imply how gold could be leading the charge to new all-time highs from the current levels. So, as I was saying, finally, within this wave 4 correction, we see similar proportions with what we've had in this white wave 2. At this point, with the latest low, it's about 3 days longer than what we've had within the wave 2. And typically, within these patterns, it is most often the case that the wave 4 will not be shorter than the wave 2. This is particularly true the larger the time frame is, and since it finally has a match, our chances of seeing a reversal have improved significantly. So in this structure, I'm looking at an A, B, C pattern, and it could realistically be something even more bearish, but even in that case, I would expect a larger correction to happen, not what we have so far seen, and I would actually expect even lower prices within the current development for it to be able to even reliably suggest it will continue to even lower prices. So instead, we will focus on this decline, the wave C, and we have been tracking this in red in the idea of a potential impulse most recently. Within this structure, we have been looking for one additional low in this red wave 5 within a 5-wave pattern. It has pushed within its wave 4 correction perfectly into the 38.2% retracement, but what is rather interesting and maybe even a bit unsettling is that within this decline, within this supposed red wave 5, we do not see 5 waves down. This is not necessarily a positive sign, quite the opposite, because as I'm tracking an impulse within this structure, I would have liked to see such a development. Now, could I still track a 5-wave move down, a wave 5 bottom to be in? Possibly, but it's not something I will have high trust for, and instead I would really need to see levels of resistance broken to strongly suggest that this is indeed the bottom of the correction. Firstly, the 50% retracement, $66.40, the levels of resistance in red are not changing. Then ideally even the $69 level, the 61.8% retracement, and if we are being honest, ideally it even sees a break above the previous swing highs. Pretty strong structural resistance we have in this area, around $71.30. And above any of these, we really want to see sustained breaks. And here comes the risk. Since we cannot reliably track 5 waves down to be in place within this development, even if it only formed a marginally lower low, the idea is that we have to expect lower prices. How could those form? Well, a couple of ways. It could be the case that instead of having this as the red wave 5, this would have been a wave 1 of the red wave 5. We would then expect a wave 2, a wave 3, a wave 4, and a wave 5 to complete this pattern. This would line up pretty well given the already pretty decent rally we are watching, but it would imply it would visit even lower prices. It would imply we would get a sustained break below the white levels of support, and it would imply we would be looking at a different pattern to build even within the larger time frame structure. Not ideal in any case. Now, for this to become less likely, we need to see the 78.6% retracement broken. We need to see a sustained break above this level, $61.80. Does it mean that the bottom would be in if it manages to get the sustained break above this level? Unfortunately not, but it would greatly improve the odds of that being the case. As within this wave 4 in red, it would still be possible that we get an extension, that we get a reset, in which case it could get an entire new attempt of the red wave 5. The positive aspect here is that if it manages to push above the current wave 4 top, the likelihood of that happening would have decreased even further. It would also fully invalidate this yellow interpretation we are tracking to lower prices. So already, major improvement in terms of the odds of having a bottom in, if we manage to get a break above $63.70. But I want to be clear that it does not guarantee it to be the case. Beyond that, we will continue to have levels of resistance to track, but as it stands right now, we are pretty far from any of these achievements, and it would probably be more useful to look at the internal structure, look at internal levels of support that would still allow this uptrend to materialize. So, in this development, I am looking at even a potential impulse, to be honest. I am considering the bottom to have been here, even though it formed a marginally higher high. I believe that to have been a truncation. Then from that point on, I am tracking a double. 1, 2, 1, 2. Then this would be the wave 3 up. And right now, the most likely outcome is to have a wave 4 development, but without ruling out the possibility of different patterns to emerge. And there are actually quite a few options, but primarily the levels of support that I would be watching for this to be a reliable extension higher would be down to the 50% retracement. Firstly, right, $57.95, exactly in line with the 50% retracement in white. And then I would allow a slight break below these levels, as it is possible to also track maybe another 1, 2 here, in which case the levels of support would allow a deeper retracement, or potentially even an ABC pattern. And this is not the only possible structure that would allow extensions higher, but this is what it needs to follow to be able to contain a reliable pattern, a pattern that we can track with a decent amount of trust. And with all of that said, again, the primary count would be here a 5-wave pattern, where right now we would be looking at the formation of the wave 4 of a larger wave 3. And one additional thing, if it manages to fully follow through, build this 4th and a 5th, and then have this larger wave 3 complete, and then build another 4th and a 5th, this will be a high probability opportunity for us. We will have achieved an initial 5-wave move to the upside, which suggests with high likelihood that after a 3-wave correction into an internal area of support, we will see extensions to even higher prices within at least another 5-wave move to the upside. This is the type of pattern that provides to us a high probability area of support and a high probability setup. And to be honest, this is about it for silver. Anything beyond this is that we may be able to allow a slightly deeper retracement in the case of the currently ongoing correction. But as I was saying, ideally it holds higher levels of support. Ideally it holds the 50% retracement here. But for those of you who insist, you could be looking all the way down to $57 to allow for a reversal, potentially within a wave C, possibly within something even stronger, possibly a 1, 2, 3, 4, and a 5, and we get an even more extended wave 3. But for now, this is about it for silver, so let's move on to gold, where we get some additional quite useful information. And here we are looking at the same pattern to have developed. We are looking at a 5th wave to have taken place, where we actually do not see a lower low. What does this mean? Does this mean that the pattern is not complete? Well, possibly, but this is not a requirement. In fact, quite often, within the end of a pattern, the end of a potential correction, it's not particularly rarely the case that we see a truncation, which could have very well been the case here, where this would have still been the wave 5, and we would still be looking for this to have been the white wave 4 bottom, but simply the bottom of the wave 3 would have achieved lower levels. I do not have anything against this interpretation, and it is something I'm considering as a very realistic possibility. Overall, we are still watching a 3-wave pattern to have taken place here, and I'm looking potentially for extensions even lower, but as of right now, I'm also able to look for the reversal in the case of gold. And you may be wondering, how are we able to look for a potential bottom in the case of gold here? Well, interestingly enough, the shown count here is not the only option. I am able to look at this to have been the wave 1, the wave 2 would have topped here, the wave 3 would have bottomed here, the wave 4, yeah, this would have been the wave 4, and then this would be developing an A, B, C structure. Well, in this interpretation, we would expect 5 waves down within the wave C, right? But hold on, here, if we choose to zoom in, we are actually looking at a potential 5 wave pattern to the downside. We are looking at a potential bottom to be in within this as a wave C. Still, possibly the case that the wave C wouldn't have necessarily managed to form a lower low, but I do not consider that to be a deal breaker. So right now, I am tracking overall a pretty similar structure, a pretty similar outcome. I am looking for possible extensions even lower, and of course, I will be tracking the levels of resistance for a potential wave 2, a potential wave B. I wouldn't care too much necessarily, but if I see the levels of resistance broken up to $4,160 with a sustained break, the likelihood of this extending directly lower would have decreased, the likelihood of having a bottom in within this white wave 4 would have increased, and I would be looking for the next levels of resistance, of course, where instead of having this as the wave C, I would be looking at this to have been a wave A down, then an A, B, C pattern within a wave B, and a wave C to eventually still take it to lower prices. And the same theory applies here. We want to see evidence. We cannot know that a bottom would be in, and in the case of this larger extension lower, I'd be tracking a slightly different pattern where right now we would be looking for an orange wave B, let's say, where the levels of resistance would extend up to the 78.6% retracement at $4,300. If we get a sustained break even above this, it is even more likely to break above the beginning of this entire fifth wave down, suggesting it to be even more likely that a bottom would indeed be in. So ultimately, the goal will be to break above $4,400 and see the reversal to new all-time highs within what would be expected to be a potentially quite extended wave 5 materialize. And in the case of commodities, the wave 5 is most often the strongest wave. There is deep psychological reason for this. Rallies within commodities are not driven by euphoria, but instead they're driven by fear. So, thanks for coming to my TED Talk. No, just kidding. For now, this is about what we can extract from the currently available data, and if you want even more opportunities from me, please check out the Patreon. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.